Reliance from here on, you believe that, the tie-ups that Street has been talking about?
Afternoon, Anisha. So I think I would largely concur with Somit to a large extent on the dynamics that is put forth for various segments that Reliance operates out of. But triggers going forward, I think two things. One, I think if there is a genuine recovery that probably happens in terms of China per se in the next few quarters, the downstream business, which definitely defines how the petchem business will move for Reliance, and the spreads thereof. Should show signs of stability and improvement, and that can have a telling say in terms of the petchem performance itself. As far as the upstream business is concerned, and as far as the margins are concerned, my own sense is that it's largely a variable again in terms of the entire demand-supply dynamics. But because Reliance has so many options in terms of feedstock at its behest, to be seen as well, they are having a very, very calibrated approach in terms of their new age businesses as well. The capex has been calibrated as well. So what kind of timelines are we looking at for these new age businesses without minimal burden on the balance sheet is also going to be critical. So I think these two segments might actually offset the weakness in upstream and the O2C business.
Right. Of course, Oberoi Realty is the one which is holding up very well today. At the board meet day after, they're going to be looking at a fundraising plan as well. They recently, remember, approved the proposal enabling resolution, that is, for raising about almost 6,000 crore rupees in terms of funds. Mayuresh, what is it that you're making of the Realty pack? I mean, even last week in the recovery and the rebound that the market saw from the previous lows, it was Realty actually which led the charge. Any of the Realty names that you think one could have bought at the declines or can still buy now?
So afternoon, Aisha, I think the real estate cycle is still well and truly on, right? We're probably in the fourth year of the real estate cycle. The expectations in terms of developers actually doing well, specifically when it comes to the mid-premium segment. You're still hearing reports that the high-end segment might see some stickiness. You've actually seen some element of inventory built up. So the developers who are catering to the mid-level segment, the mid-premium segment, might actually continue doing well, in my opinion. Again, I think there is competition which has probably added pressures, specifically in metro and tier 1, tier 2 cities, as far as a lot of redevelopment projects are concerned. But I think a lot of these players have already embarked upon an asset-light model. They're doing a lot of JDAs with a lot of private players within respective cities as well. And that probably restricts a large amount of leverage that they carry onto their balance sheet. Realization growth in terms of all the new launches that we are probably looking at, and the new launches that have happened in the past few quarters have remained extremely stable. In an environment where interest rate cuts will also happen from RBI at some point of time at the end of this year and the next year as well, we're probably going to see more action probably come through on this space. So yeah, I think Oberoi, Godrej, DLF, if somebody's holding, can continue holding on. But my own sense is that real estate ancillaries, Aisha, can be a tad bit better play compared to the developers. They've gone through a cyclicality of pain as far as input cost inflation is concerned. But as all these new homes are getting developed, I think all these real estate ancillary stocks might come back in focus. Greenply, Century, a few examples that, in my opinion, can be.
Mayuresh, what's your sense on chemicals? Last couple of quarters, we have been talking about how it's perhaps the, bottom which has been made for them. Things are expected to look well, but that just keeps getting kicked down the road quarter on quarter. What's the expectation now? Would you bet on any of the chemical names?
So selectively, Anisha, I think a few of the agrochemicals and a few of the specialty chemicals look decently placed. So what we saw in the previous few quarters of destocking taking place, China still dumping a lot of the bulk commodities or bulk chemicals into the open market. I think that probably is still continuing at this juncture. But at some point of time, I think specific agrochemicals and specific specialty chemicals, the restocking exercise will begin. You've seen green shoots as far as demand is concerned from end user industries in the Eurozone, in North America, and parts of the Middle East as well. And obviously, they have to contend with the container issues that is still going on as far as the Middle East crisis and the Red Sea crisis is concerned. But to a certain extent, the under ownership is now fairly covered for a lot of these players within these spaces. Second half, the earnings recovery should be relatively stable. And my own sense is that as things improve in the next financial year, you will see definite amount of earnings growth that comes through for a few of these players. So I think within agrochemicals, again, I think you've probably got players like a PI, which can do well. Neogen, you've probably got Anupam Rasayan, you've probably got AB Organics. They're doing some niche activities as far as their specialty chemical is concerned, and a fair bit of an agrochemical presence as well.
Mayuresh, what's the view on Hyundai IPO, subscribe or avoid?
Yeah, so I think a large part of the money is going to the parent. They're going to make a killing out of this, Anisha. So it is an OFS. Let's remember that. Nothing is coming back to the company. But I think the numbers so far have held up pretty well. So I think the product launches, the volumes, the top line growth, the margins have been reasonable enough. And to a certain extent, I think if an investor has a medium-term view, he can subscribe to the IPO. But I've also got an equally important point to mention that Maruti in the same breath, right? The mid-segment cars that they operate out of, the expectation largely is that they should recover their market share over the next few quarters. They are expected to do a lot of launches as far as the high-end segment is also concerned. And let's not forget the kind of distribution, the sales network, the Nexa showroom for premium cars that Maruti probably has. And there is not much of a valuation gap between Maruti and Hyundai. Maruti gets a sort of a premium valuation for all these factors. So Maruti also should remain on your watch list.
Mayuresh, any fresh stock recommendations that you want to leave us with?
Yeah, so a couple of names. I think we are keeping a stock like Dealing on our radar as well, Anisha. I think the kind of commentary that is probably coming through in terms of new products that they are developing, the expectation largely in terms of data consumption trends should continue in the Indian context. We've obviously seen a huge amount of spurt when it probably comes to both broadless connections and wireless connections as well. And new product launches is something that can probably hold this company in good stead. Again, from a balance sheet perspective, very, very strong balance sheet. And our own expectation is that with new products and more service offerings expected, the earnings growth should probably stay on track for Dealing in general. One stock, again, I think, which I have probably discussed in the past as well, Praj Industries, I think, has retraced some bit from upper levels as well. But the kind of innovations that Praj is also making, specifically when it comes to not just the 2G or 3G ethanol equipment side, the diesel blending side as an example, the blending in terms of ATF as an example. And therefore, I think as these markets open up, Praj already has the technology in place to probably capitalize on all these opportunities, which are pretty humongous over the next few years. Their engineering presence also, when it comes to water treatment and high purity solutions, is something that can augur well over the next few quarters with more orders expected their way with reasonable margins. A fair bit of an estimate can be put forth in terms of reasonable amount of earnings growth that can probably come through. So Praj at this level for declines can also look like a good opportunity.
Mayuresh, any mid-cap, small-cap banking names that you're watching out for?
So Karur is something that we like, Anisha. I think our take is that the advances and deposit growth has been reasonable enough. Yes, the banking industry is grappling with deposit growth. But I think the performance so far as Karur's overall dynamics are concerned, seem to be pretty well placed. Secondly, I think in terms of their asset quality pressures as well, they have come off quite significantly. And our own expectations is that they should still be coming off in the next few quarters, which gives the inherent strength as far as the bank's balance sheet is concerned. PCR is pretty strong, well provided for. Capital adequacy remains reasonably well equipped enough. And therefore, I think there should be a reasonable amount of credit deposit growth. Cost to income ratios should trend lower over the next couple of years. And return ratios, specifically ROEs that we are probably looking at and tracking at MarketSmith India, should probably improve. On our parameters at MarketSmith, EPS, RS rating, institutional holding as per the cancelling norms look perfectly placed. So Karur is one stock that we are probably